Did you get a bounced check from your customer? Well, you need to know how to fix that in QuickBooks Online. In order to know what to do in QuickBooks Online to fix your records for a bounced check, let's first take a moment to discuss what happens when a customer gives you a check. So anytime any customer gives you a check, you immediately record a plus to the bank balance and a minus to the customer's balance at the moment you get the check from the customer. Then you bring the check to the bank. Then when you deposit the check into your bank account, the bank will record a plus to your bank balance even though the money has not yet come from the customer's bank account into yours. That's the crucial point. Then, in order to get the money from the customer, the bank presents your check to the customer's bank. And when the customer's bank gets the check, they give the money from the customer's bank account into yours. But what if there's not enough money in the customer's account at the moment our bank goes to take the money from their account and put it in yours? So then, instead of the bank giving the money, the bank will give back the check and indicate that this check is not sufficient funds. That means that the plus that the bank put to your account originally should have never been there in the first place. Now, the bank is not simply going to erase the original entry of the deposit. It will instead record an additional transaction that lowers your balance for the amount that they wrongfully increased your balance for the check that went bad. Then you have to do that yourself in QuickBooks Online. That's what this video is all about. Now, to understand what we have to do to fix it, just remember the 2 inside 2 rule. Meaning, there are 2 sets of records in QuickBooks Online that need to be fixed, and in those records, there are 2 things each that you have to adjust for. So the 2 sets of records that you have to fix are your bank account records, because you put a plus because you thought the check was okay, and the customer and account receivable records because you lowered their balance because you thought the check was okay. Now, both are wrong, and you have to fix them. Your bank account balance is wrong for 2 reasons. Number 1, the bank lowered the account for the amount of the check, and secondly, the bank also charged you a fee because your customer bounced a check. Both of those things have to be recorded in your QuickBooks Online records. That's right. You get charged if a customer bounces a check on you. And secondly, your accounts receivable and customer's individual balance are both wrong because you lowered their balances because you thought the check was good. Both of them have to be fixed, and on top of that, you actually have to charge your customer a fee for the service of what you're going through to manage this bounced check. Now, that fee should be a little bit more than the bank charged you for their check. This way, you have a little income for the service you're providing for dealing with the customer's bounced check and making these entries. So how do we make fixing all 4 of these things a smooth process? Well, it's very simple. You have to add 3 simple things to your list of products and services in QuickBooks Online. Now, the first item that you add to the list of products and services is actually going to handle 2 out of the 4 things that you need to fix, and it's going to fix it in one shot. So when you open the list of products and services in QuickBooks Online, you should name the item Not Sufficient Funds Check from Customer, or Bounce Check, or whatever you want to name it. But you must connect the item to your bank account. Now, normally you connect these items to income accounts or expense accounts, but by connecting it to your bank account, you'll be able to put it on an invoice, and that will fix the first 2 out of the 4 problems in 1 second. From the top right, we click the cog wheel. We go over to the list of lists and click Product and Services. Now, we have all the other items we had put in previous videos, and now we're going to click New. And we're going to make this a service because we're managing the bounce check for the client. And we're going to name it Customers Returned N.S.F. Check. You can pause the video to type it in, but the most important thing to remember is that it does not get connected to an income account. It gets connected to the bank account that was affected by the bounce check. Then you click Save and Close. So now let's do an example. Let's imagine it's April 1 and we received a notice from the bank that check number 5678 that we paid to Candy that was dated March 6th and deposited on March 9th has been returned as N.S.F. and its amount was $2,660. Also, the bank charged you a $30 fee because your customer bounced a check. So the combination of those two things are what the bank changed your balance for that you just found out. And again, when a customer bounces a check, cash in bank decreases by the amount of the bounce check and also decreases by the amount of the fee that the bank is charging you. And at that same moment, accounts receivable is increasing because now the customer owes you the amount of the bounce check. And of course, we'll get to charging them a fee for that a little bit later on. From the top left, we click New, Invoice. Now my invoice number says 16 because I have to periodically play around with it, but let's make it the same number regardless. And the customer is Candy. Now, make sure the date is April 1 of 2025 because that's the date that the bank recorded it in your bank records, so that must be the date of the invoice. Now, the product and service you choose is Customers Returned N.S.F. Check, and it's stated clearly on the invoice when you bill them. And if you did not remove the taxable check mark when you created the item, this will show up by default. So you can just click to remove it and you can edit the item later if you choose. But most importantly, the amount must be the amount of the bounce check. Now, you have created a bill that you can send to the customer asking them to pay and clearly stating the reason. You could put the check number and other information in the description field if you want to be clear with your customer, or whatever else you feel you need to put in the description field. But at the moment you click Save and Close, and don't worry about the number, just click Yes, you can open the trial balance. You can come down to Reports, Trial Balance, and you can see the bank account has decreased by the amount of the bounce check. Double click and go down to April 1, and you can see April 1 we sent them an invoice that decreased the bank account by the amount that the bank decreased the account, and here's the reason. And now that we corrected for 2 out of the 4 things that need to be fixed, we now have to record the fee that the bank charged us. And of course, that's very simple to do. Now in this case, we use the expense window, and the amount of this expense is $30 in this example. And we will put the same number the bank put, 181818. So we can click New, Expense, just like we learned before, and
You don't have to put a payee, or you could put the bank as a payee, but make sure that you're recording it in the correct bank account, the account that the bank charged the fee, reference number. Now, of course, if you have bounce checks all the time and you're very often getting charged a fee, you might want to create a separate account in your chart of accounts specifically for the bounce check fees that your bank charges you as a result of the deadbeat customers. But the truth is, most companies don't have that many customers bouncing a check. So in that case, you can simply use the same bank fees expense account that we've been using all along with all the other bank fees, because it's not going to happen so often that you have to separate the bank fees for the bounce checks. So let's just use the normal bank fees expense account. Or how to decide the category. But we know the amount is what the bank charged you. Couldn't hurt to associate it with a specific customer. And now when we click Save and Close, we can see in the trial balance, bank fees expense shows up for the first time as $30, and you can see cash in bank has decreased by the same $30.
And now we will record the last thing we have to correct for when getting a bounce check. We now have to charge the customer a separate fee for managing their bounce check. Now, in order to charge the customer a fee, you have to add an item on the items list that you can also put on an invoice that tells the customer they're paying for the service of you processing their bounce check. So you have to put an item on the list of products and services, and you have to connect the item to an income account. Even though that income offsets the expense that you just paid, it's still income to you and should be tracked separately in a separate income type of account. In fact, it should actually be put in an other income type of account, because that income is not the normal way that you earn money in business. And if you make the detail type and the account type other income, that income account will show up at the bottom of the profit and loss below income from normal operations. This tells people that you still earned income, but it's not the normal way that you would do in business. From the top right, we click the cog wheel and we go over to the settings column and click chart of accounts. We're making a new account, and it's an income type of account, and the subtype is other income. You can other income, and of course other miscellaneous income is also the detail type, which is also called the tax form section. And the account name will be Income from N.S.F. Check Processing. And you can pause the video if you need a second to finish typing and click Save. And now the last setup step is to make the service item that you are charging the customer, and let's call it processing fee for return check. So again, we go back to the list of products and services. We click the cog wheel. We go to the column of lists, products and services. Now this is a new service. Click new. We make it a service, and the name of it is exactly what we said, processing fee for returned N.S.F. check. And of course, we're going to connect it to the income account that we just made. Scroll all the way down to the bottom to get the other income section and choose the account. Now, before you click Save and Close, you could scroll down a little more and click Edit Sales Tax. Some of us have the default that every item is automatically taxable. So after you click Edit Sales Tax, scroll down.
And if you click non-taxable and click done, then it will no longer bother you when you make an invoice, and you won't have to worry about removing the check mark. Click Save and Close, and now we're ready to bill the client for managing the bounce check. The date of the invoice should be the date that the bank deducted the money from our account. And in this example, we are charging our client $50 because they bounced a check on us. Our bank's fee should be reimbursed, and we should also get something for our time. So it's very simple. From the top left, we click New. Then we click Invoice. The date should be April 1 because that's the date that the bank charged us. The customer, of course, is Candy. But what we're going to put, by the way, make this invoice number 17 just to make it consistent. Don't worry. Now, this time we're going to put this item, the item that's connected to the income account. We're specifically charging a processing fee for the return check, $50. Notice we don't have a problem with the little check mark, and we click Save and Close. Don't worry about the number, and when it closes, you can now go to Reports, and you can open the trial balance, and you can see income from N.S.F. check shows up for the first time as $50, and accounts receivable has increased. And if you open up the Open Invoice Report, you can see that there are 2 additional invoices to Candy that she now owes specifically regarding this bounce check. You can click Reports and go to Open Invoice, and you can see at the bottom of Candy that this invoice is $2,660 for the bounce check, and this invoice is $50 for the charge of the bounce check, and both of them have been added to Candy's balance. We can email them to her or send them to her in the same way that we send all the other invoices. Now let's try a condensed example so you can see how easy it is in a real situation. Let's imagine on April 2nd, the bank reduced our account by $6,000 for a returned N.S.F. check from Alan that was received on February 26th and deposited on February 29th. The bank again charged us a $30 fee, and that's the transaction number, and we need to charge Alan $50 for dealing with this situation. From the top left, we click New Invoice. Make sure the date says April 2nd of 2025. The customer is Alan Arby. Now, the 2 items are for the bounce check. The first item that we put is this one, the one that's connected to the bank account. Customers returned N.S.F. check. Remove the taxable check mark and make sure you put the principal amount of the check. Then on the next line, you click the pull down and you choose the processing fee that we are charging for dealing with this check. And we're charging the customer $50. So now 2 out of the 3 steps are done within a second, and this will correct our records and give us something to formally request payment from the client and explain clearly what they're paying for. We can click Save and Close, and yes, don't worry about the number. Now all we have to do is record the bank fee, the fee that our bank charged us. We click New, Expense, make sure the date is April 2nd of 2025. You could put the bank as a payee if you want to, but we will just put the reference number and The category will be the expense account that we use for bounce checks and other things. The amount our bank charged us is $30, and it doesn't hurt to track it by customer if you do job costing, but this part here is optional. When we click Save and Close, we can see our trial balance is up to date for all the numbers. The income from our processing of the customer's N.S.F check is now $100 because it has 2 service fees for $50 each. Bank fees expense is $60 because we were twice charged $30 each for 2 prior customers' bounce checks. Now, cash and bank should have an invoice and an expense for each of the bounce checks. And if we double click and scroll to the bottom, we can see that the expense was deducted from this account, and the original principal amount was deducted from the balance by using this invoice. And the last place to check is the report for open invoice. Because if you look at the bottom of the Allen section, you can see that he has an April 2nd invoice that he owes $6,050 that increases his balance for the bounce check and the fee that we charge.